If you look at the sectors this week, healthcare is up 4.5%, materials are up 3%, financials are up 2.5%, comm services and tech doing just fine, but they're not the best 2 or 3.
They are not. So today we have 30 new S&P 500 52-week highs. Of those 30 highs, 27 of them are non-technology. Goldman Sachs, Morgan Stanley, JP Morgan, Gilead. These are the names. American Express, Amgen. You do have your CrowdStrike, your IBM, and your Seagate. So the battleship of momentum, as I've identified a couple of weeks ago, continues to turn. It began the turn with what were the real VIP macro assets when you think about momentum, and that's the dollar, which has been lower on 2025. In September is making the turn higher. It is crypto, which in early October found its peak. Thereafter, it was gold that found its peak. So that momentum factor continues to turn more towards quality, and it's represented in the type of performance that you are describing.
Liz, is this the beginning of the chase into year end?
I do think it's part of the chase that's ongoing. The chase began with people chasing mega cap tech continuously.
Yeah, I mean, like people who, missed out a little bit on that. Like PM's underperforming because they can only get so big in those areas. Now it's the make up or break up with these markets.
That's right. It's the beginning of the chase of everything that might now try to catch up with mega cap tech. So what's happening and what we're seeing, and this is a lot of why I have been pounding the table about healthcare. It was so unloved for most of the year that now investors are looking for other opportunities for growth because they can't convince themselves to put a lot of new money to work in tech. So you look at things like pharma and biotech, and here we are. The chase and that catch-up trade is happening. I would expect the catch-up trade to also benefit small caps, the equal-weighted S&P. Now, I don't think they close the gap entirely because the gap is wide, but I think there probably will be some narrowing of the gap. The one risk that I want to point out is that we're headed for probably a government reopen today, so we're likely to start to get the data that we missed. Now, we may not get any October data whatsoever out of some of those big releases, but we'll start to get some of the delayed data. If the market has to digest that, and if some of the private labor data has been any indication of what's to come, there might be some bumps in the road and some different things that we have to expect out of the Fed come December.
Yeah, I just think that we would put the Fed back in the, we start creeping up closer, Weiss, to 100% for December if the labor data gets any squirrelier. But healthcare highest close since October of 24. Financials hitting new highs today. Everything rally? Is that what we're on the cusp of here?
I think we're really on a pause now. What's interesting is a pause in the rally in terms of the upside. That's my view. I think volatility is still going to be the watchword going forward until we get through the Fed. So right now we've got two events, major events. We've got NVIDIA next week, a week from today, and then we've got the Fed decision due on December 10th. So typically, the game's known that the pull forward of the January effect we've seen year after year getting earlier and earlier. We're not seeing that this year. I think we will see it, but once we get through that, again, those two dates. Look,
what do you mean we're not seeing it this year? I mean, in 1 month, the Nasdaq's up 5%, S&P's up 4.3%, the Russell 2000 is up 2.5%, and the Dow is up 6% in a month.
True. But it's a continuation of what we've seen throughout the year. The year's been a pretty good year. We don't see every 5% month, but we came off, don't forget, a few rotten weeks, very rotten, and particularly in technology. So look, healthcare, there's a rotation into it. I get it, but I think that depending where you are in healthcare, it's a landmine. So I don't know who others.
Well, that's because you're walking in the field of UNH. Which has been a landmine. That's the bulk of your exposure. Maybe it's the only exposure you have. People are making money 6 ways to Sunday.
I made a lot of money in UNH. I sold it. I didn't sell at the top anywhere near it, but I bought it pretty damn close to the bottom, and it's done amazingly well since then. But what's happening in healthcare is the government's going to cut back on their spending. We know that, right? And we know that insurance companies now are looking to increase their margins. And what do they do in that? Right? They cut back on benefits, everything else.
Yeah, but you're focused on the largest of the healthcare. I mean, the biotechs have been ripping. Lower rates are a boon for that, Kerry. You know this story well. We don't have to have a whole healthcare conversation, but the point is that this is what the bulls would have wanted. if you're going to have a little bit of a sleep for a couple of days in tech, could something else pick up the slack? The Dow over the last couple of days, and if we close over 48,000 today, would suggest you're darn right we can.
Well, healthcare is a place to put money for sure because it's underperformed for years now, multiple years in a row. If you put up just a chart of Amgen, because it's one of the names that you guys mentioned as hitting a new high, right? Okay. So this is a stock that is so underperformed and it's had this big rally. But, you know, look at the chart for the year. I mean, it's nothing like the way the S&P looked. So to make a new high, to make a 12-month high, doesn't take a whole lot. And there are many healthcare stocks just like it who have suffered all year. Had a good quarter, is showing growth. And if we listen to what's gone on in the last couple of weeks, talking about who can make a deal, Novo made a deal, Lilly made a deal. That deal brings the price down, but the margin on these drugs is so high that they still come out winners. And winning in this environment is what the market's about. The tech and the ComServe companies have been the winners, the sole winners. Now you can add other companies such as these. Maybe financials will be winners too because they figure out how to work the system.
They're up 1%. Financials are today. Healthcare is up 1.25% as a group. Do we collectively think that we're set up for a nice run into the end of the year and that this would be, I'm trying to think, like, what would be a better sign for the market than what's happening over the last couple of days?
This is the chase for performance. This is exactly what it looks like. This is what we've been speaking towards. Last week, we talked about not going short the market because we thought the government shutdown was going to end early this week, and thereafter you'd get a rally and you get the recognition that opportunity exists in other areas of the market. That's exactly what has unfolded. So why should it discontinue? It will continue into the end of the year. Once the calendar flips, you turn the page, it's a clean slate, you take it from there.
Yeah, and just to be clear, I'm looking for the rally. It's the timing of the rally, number one. Number two, I'm not anti all health care. There are certain areas of health care where I'm definitively negative on.